and welcome to another update video about Solana. Here we want to take a look at the smaller time frame because Solana broke above the signal line earlier today, and then since the last update has moved up a little bit higher. So I will give you here the relevant parameters for the for the coming sessions, let's say for the weekend, and what I want to communicate what the levels are that now need to hold to keep the overall short term. The short-term uptrend actually alive that started down here on the 11th of March. So that signal, the break above the green line, that was a breakout. That was a break above the 12th of March high and the 10th of March high, here around $131.50. Essentially, until we broke above resistance, there was no, let's say, confirmation that the blue count would be leading. Of course, we saw already that the bulls were stepping in our support zone that was communicated yesterday between $122 and $115. This was the one for the blue count, support zone rally. And then we said, look, if this is a wave 2, we would like to see a rally higher, and it needs to avoid a break below $115.75. That was done, and then we saw throughout the day that the upside momentum built, and the market started to rally a little bit. Nothing major, okay, nothing major. This is still only a 3-wave move, and we're approaching very, very important resistances, especially here around $137. That's the 100% extension, a very, very important resistance level. It's very important because if this is bearish, this could still, technically, this could be a wave 4 still. Okay, so what I have to change though, it cannot be an impulse down, but it could still be a diagonal pattern. Difficult to detect then, it doesn't really look like a diagonal down. Therefore, I would say the wave count in blue seems to be leading at the moment, but still it won't be confirmed until we get 5 waves up. So, but anyway, this is the area where we wanted the bulls to step in. That's what I posted like probably 12 to 16 hours ago on X as well. Highlighted here that the bulls need to step in here. The support zone in blue is where a typical C wave would complete, C yellow scenario, and that was the larger time frame, the daily chart. This is here where the bulls actually stepped in. Because these blue zones, they are areas of probability. That was here the area between $102 and $131, and an ideal target for this C wave down, which could lead to a reversal. But if you watched the previous videos, then you knew about that. Also, by the way, check out our X profile here. There are lots of additional updates, stuff about mindset. We can have a conversation about charts, things like that. But this is the blue zone down there. So price turned around, and now we just need to see if the bulls can generate a 5-wave pattern. Why is this so important? The 5-wave move just provides clarity. That's it. We don't need to see the 5 waves, but it provides clarity. So what I'm tracking here is a wave 1, a wave 2, a wave 3, a wave 4, a wave 5. If we get this 3rd wave done, then it's basically then ideally that the 3rd wave would get to $143.81. Then we want to get the 4th wave support and the 5th wave. I've already added support for an internal 4th wave to the chart. So at no point the price should now break below $128 until we get all 5 waves completed. Now, if it breaks below it, then it indicates that something different is playing out. I will also remove now this support zone down there. We don't need that anymore. But the $128 level now keeps the uptrend alive. Basically, 128 is the pivot between short-term bullish momentum and short-term bearish momentum. As I said, this could still be a corrective rally, probably a wave 4, but only a break below 128 will make upside continuation less likely. I believe that should give you all the relevant levels here for the weekend. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thank you very much. Bye-bye.